The McAlvany Weekly Commentary, covering monetary, economic, and geopolitical news events. Now, here are Kevin Orrick and David McAlvany.
Welcome to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany. And David, obviously everyone right now is in wait for this bailout of all bailouts, this taxpayer travesty. What are your thoughts right now about what Wall Street's waiting for and the Main Street?
Frankly, Kevin, for any of our listeners who enjoy history, this is history in the making. We're watching major transitions, not only at the level of finance and economics, but socially and politically as well. The expectation of the man on the street is quickly becoming, what will government do for me? And so we have what really is on the brink of constitutional breach as we move towards absolute power in a place where, frankly, we wouldn't even have judicial review. And I'm specifically speaking about the bailout plan that has been proposed by Paulson and Bernanke. If it is approved by Congress, sweeping controls will be handed to the Federal Reserve, and we will see the taxpayer take the primary risk. We're looking at $700 billion as a starting point. That's what's being asked for. And Paulson has already said that's by no means the limit, but we need to ensure that we have a good starting spot. Kevin, if you recall, the war that we're in now in Iraq was estimated at about 1/10 of what we've currently spent. So 10 times, 9 to 10 times, the original estimate is what we've spent on this war. My guess is that we're going to spend 5 times what's estimated in terms of what will this cost the taxpayer.
Well, haven't we opened a Pandora's box when we come out and actually say, and this is literally a quote, we're literally days away from a complete meltdown. That's what Hank Paulson said. So when you open up that box and you tell the world that we're days away from a complete meltdown and the only solution is $700 billion of taxpayer money. I mean, and they're already just loosely talking about it being more than $1 trillion if you count the other bailouts.
Well, Kevin, I think the major flaw in this is that they're looking at this as the same thing as an RTC-style bailout. And the key difference is that we're not talking about real assets backing the RTC. We're not talking about strip malls and businesses and banks and homes that are going into the portfolio of the RTC. We're talking about crap paper, just absolute garbage paper.
It has no value.
Toxic waste, which was structured by Wall Street in order to be some sort of an insurance against this very set of scenarios which is unfolding. And so what is backing the paper? And when you say nothing, you have to wonder, well, then how is it that an RTC-style bailout, where if you hold the asset long enough, it will return to its previous value? The previous value was fiction to begin with, Kevin.
Is this really just a delay to a collapse? Is what we're seeing right now a perception management to keep us from having a complete crisis this week or next week? The stock market looked like it was melting down last week, and gold was skyrocketing, so something was happening.
I think Wall Street and Washington are doing everything that they know how to do, and they don't know how to handle this. This is beyond the scope of their education. There's no PhD that prepares you for this. There's no amount of time that you can spend on Wall Street in order to know how to deal with what's happening in the financial markets today, because it's never happened before. 1929 was tame in comparison to what is happening today, because there was not the degree of leverage that we have today, and there was not the creative finance that's been introduced over the last few years. Now, granted, the SEC and the groups that are supposed to manage this, they really should be scrutinized and lambasted through and over this, because they made this happen. It was just a few years ago that they allowed your main Wall Street firms, 3 of the 5 which they allowed this are now gone. Merrill Lynch, Lehman Brothers, and Bear Stearns were all allowed, along with Morgan Stanley and Goldman Sachs, to more than double their leverage. This was not a bank policy saying, let's see how far we can stretch it. This was a governmental mandate. This is the SEC saying, it's okay by us if you double your risk.
Now, Goldman and Morgan Stanley are gone. I mean, at this point, they're not gone, but they're now commercial banks, and no longer do we have the investment bank.
So, Kevin, I think you could sum up the current crisis by saying this. We are in the mother of all bailouts. We know that. And the mother of all bailouts equals one thing. We have just ensured the death of the dollar and inflation moving from a moderate phase, which we've been in, to hyperinflation over the next 2 to 3 years.
At any moment. I mean, we don't know when that switch will get flipped. But at any moment, the dollar could drop into the hyperinflation that we talked about with Jim Deeds a number of times in the last 6 years.
The government is now monetizing debt, and that reduces the value of all outstanding dollars. So while this may save the stock market, it has ensured the death of the dollar. And our foreign creditors know that. So, Kevin, let's transition, and we've got on this week's schedule Alan Keyes. We're very much looking forward to the interview.
Ambassador to the UN.
He spent time in the Reagan administration.
And he's a presidential candidate at this time. And he's been very clear on his message for many years, uncompromising. He says that this system needs a systemic change to bring about true results.
Fundamental reform are the things that he's focused on in every area, whether it's politics, economics, the tax code, and he's a man who, like we would expect of a good statesman, is actually focused on the real issues. With so many things happening on Wall Street, in the financial markets, in the economy, it would be easy to fall prey to the tyranny of the urgent. There's so many things that seem to need immediate attention. Maybe we need to pause and reflect. What is really happening? What really should be our answer to the pressing questions of the day?
Well, I think the most important thing to me is that we mustn't let present distractions, present events, distract us from the fact that we need fundamental reform in the structures that affect our economic and financial life. The banking system, the income tax, things of this kind that I think place a burden on our freedom and productivity and the prospects for the future that cannot be changed by the tinkering that is suggested by so-called political leaders these days, because it's not going to do any good.
As far as the tinkering goes, a lot of the intervention that's happening in the financial markets right now, a lot of people would claim that that's taxpayer money going towards something that should have been taken on the shoulders of private investors and private corporations. What are your thoughts right now?
I agree with that, but I think that arises from the fact that we want to ignore where the problem is coming from. Consider that major structures like Fannie Mae, Freddie Mac, all of these things, what are they really? They're quasi-government corporations. Mm-hmm. They are banks that operate for the sake of private profit in many cases, but with a lot of political and bureaucratic influence, if not control, and, of course, regulation. So you have a situation then where this system of kind of quasi-government corporate life produces a disaster, yes? And what are we told by our leaders? That what we need is more government regulation.
Right.
I think this is insane. It's a little bit like what happens with some of the drugs now in the health field, where they say, well, here's a drug that's going to help you, and then that drug produces all kinds of bad side effects, and they want to give you more drugs to help deal with that. And you end up having a system in which the money is being made by curing you of the problems that have been caused by their previous cures. And I think that's exactly what's happening in our financial system right now.
We fixed the hangnail but destroyed your liver in the process. Exactly. We're so sorry.
Well, what we need to be asking ourselves is, what is the fundamental problem that is creating this context in which we end up paying out of our pockets for the mistakes that result from a government system funded out of our pockets? And I think the answer to that question is we've got to get back control of our money. We've got to get back control of our financial structures. We've got to take that control away from government and away from an international banking system that is no longer in the least little way responsive to the interests of the American people.
You know, it's interesting. Ambrose Evans Pritchard just wrote that the root cause lies in the actions of the governments worldwide, where the central banks have kept interest rates artificially low for 20 years, and now it's creating an amazing amount of pain. Dr. Keyes, you've been a proponent for years of the abolition of the income tax, but you know, John Maynard Keynes said that inflation is also it's a tax that only 1 in a million understands. How would you recommend that be cured in the future? Is that an abolition of central banking and abolition of the Federal Reserve?
I think step number one, we need to make sure that we are not dealing with a situation